Rivian results, and they are disappointing. The loss per share much larger than expected. Its production forecast lower than expected. It is cutting 10% of its salaried workforce, citing economic uncertainty. This is a company that has already been burning through cash flow just to get the sales that it does get, which, they came in better than expected, 1.3 billion versus the market expectation of 1.25. But all the other details are negative, both on the loss, both on the job cuts, on the production side of things. Not only did production miss expectations in the current quarter, its outlook for production significantly below expectations, 57,000 vehicles versus the market was looking for them to do 80,000 vehicles. Their projected loss for the year ballooning to $2.7 billion. It was estimated to be a loss of $2.59 billion. And Eric, we were talking about this with Will McDonough, who did not like the stock, and that was a great call because it's under pressure now, and clearly it's having trouble getting its house in order.
Yeah, they will have a lot more costs to come. And so they need to be able to articulate a story of how there's just this pent-up demand for their types of SUVs, including kind of some of the newer ones that they have in the hopper that are coming soon. And these numbers don't inspire a lot of confidence there. So there's still an opportunity, like I said before, that they can chart out, a way of cutting back on costs, a way of partnering up with other bigger legacy automakers because they've already spent the capital to get to where they are currently. But I agree. These results were disappointing. And
remind me your view on Tesla. Is this one that you're picking up that you find interesting at all, or more wait and see?
I haven't been in it for the last couple of months,
which has been great.
Fortunately,
because
as it's pulled back. Interestingly, it did fire up as an interesting long idea as of yesterday. I think because there has been so much of a pullback recently, and a lot of excitement has gone out of the stock. People have kind of, basically taken it out of the Magnificent Seven. They don't think of it anymore. But they've done the hard work. They still have demand for their vehicles, even though they keep doing these price cuts. Their gross margins are still good post, 7 or price cuts or whatever they've done. So unlike a Rivian or a Lucid, they're a self-sustaining business, and so they're still the gorilla in EVs. And so I, definitely would take a look at them. And so, as of yesterday, maybe they became more interesting.
Is the thesis for EVs still intact? I mean, some of the wounds on Tesla have been self-inflicted because they cut prices so much. Fleets that buy them are left with all of these cars that when they go to resell them are now sort of less valuable. So you had some, I think it was a German fleet operator, it was SAP, I think, that said, well, we're just not going to buy Teslas anymore because of that volatility. And then you have, Hertz saying we're going to sell part of our EV fleet. And then internal combustion vehicles are doing pretty well.
Right.
Is the thesis materially dented here?
For the EV market overall, and for all automakers jumping into the pool and trying to push their EVs out there, yes, it is. But as Tesla has the 10-plus year head start on all of them, and they've got real vehicles out there that work, including the new Cybertruck that people are excited about. There's not going to be as much demand in general for EVs, but there can still be a path to a successful kind of Tesla story in 2024 and beyond.